I can see you. I'm not sharing your screen yet because we just went live.
Oh,
Um,
I'm not
guys,
sure I'm ready to release this song to the world.
you're about to release it. It's about to be on. So if you are watching After Hours Real Estate, which you are because you're watching it right now, this is the world debut.
That's hysterical. No, I've really been into music my whole life. I was just telling Chris that I write my own music. He's like, "No, you don't." I'm like, "Yeah, I do." So I'll play something for you.
All right, dude, your screen is on, so hit it.
Can you hear this? Let me see. Can you hear that?
I can hear that.
Oh, I'm embarrassed.
Is that your eyeball?
It's me looking at the screen. You like that?
It's got a little Jack Johnson vibe there.
Okay, I actually don't know who that is, but I'll tell you.
You don't know who Jack Johnson is? Sorry,
unfortunately,
Shelley.
I don't. I've never actually released my music. I only play it for me. Nobody ever gets to listen to it. The only reason I even brought this up is because I thought maybe I could do a theme song for our show.
I like it.
I'll play the chorus here. I'll let it play through the chorus, and then I'll stop it so we can actually do our show.
All right.
And it's a work in progress. You look like you're jamming out, man.
I am. The audio quality is terrible.
And then I bet you it's being picked up through my my speakers here and my whatever.
Yeah, that's exactly why. No, man, that's pretty cool. And you've got to look up Jack Johnson. I mean, that's the exact same vibe that Jack Johnson has.
I'll look up Jack Johnson.
He's one of my all-time faves. Yeah.
Really?
Oh yeah,
absolutely. I'll take it as a compliment. I just
definitely.
play what I want to hear. So
there you go. Guys, we're on After Hours Real Estate, and it is a beautiful day. I don't know why in the hell Steve is inside, but I'm out on the porch.
You don't even know the half of it, actually. Yes.
Yeah.
I'm in a closet.
You're in a closet. That's
you're outside, better. And I'm in a closet. Yeah.
I gotta. You see my shirt?
I'm glad you pointed that out. Is that what Dripping Springs is known for, Chris?
Might be. I think it's just because I'm here.
I don't think that's what they're known for.
I think it's the wedding capital of the United States, and we are drinking springs. So anyway,
is it actually the wedding capital? Because I had heard that one of the number one
United States
spots. Okay, that's crazy. Yeah. I heard one of the number one destination spots for like bachelorette and bachelor parties was Austin.
I'm sure it is.
I mean, probably not during COVID, right? I don't know if anybody's even having parties, but
maybe.
Yeah, prior to that, that's what I had heard.
So we're just like 5 minutes in and we haven't done anything yet. Guys, what we typically do is we sit around and we're going to talk a little bit of real estate. Mostly what we're going to focus on is the mortgage side of it because Steve is a mortgage broker and at Benchmark Mortgage, a lender. I say more broker banker. Thank you you're going to correct me every week that we do.
All right, man. It's all right.
Shelley, this shirt came from idealstuff.com, EYEDEAL stuff.com here. I think I've got it still up from last. There you go, idealstuff.com. This shirt is made by a client of mine. She and her husband, we bought them a house, but she's an optometrist, and so get it, idealstuff.com.
That's a really clever name. I actually really like that.
Yeah, it's awesome. So anyway, yeah, Shelley, you didn't even realize it. You're getting 2 shout outs today. That's pretty good. So in addition to mortgage and things like that, we drink on this show.
Yes, we do.
What do you got, buddy?
Well, sir, today I'm drinking a brew that is only crafted in limited numbers because
if it's not Lone Star, I'm going to hit you.
It's not. It's only brewed in limited quantities because it's only brewed from the water from the mountains of the Rockies. So today I have a classic Coors Light with me here.
No, dude, that is not a Coors Light. That is a Coors Banquet.
Coors
That's
Banquet.
The banquet, man.
Coors. It's a Coors, yes.
That's beautiful.
It's not Coors Light. It's a Coors.
I am You know what? I stepped my game up today.
But you always do a custom drink. What do you mean you step the game up?
I'm stepping it up. Like I'm taking this to the next level.
Get it? Show me.
This is also from pure snow melt from the Colorado Rockies.
So we were competing for the water on this one. That looks like whiskey.
This is whiskey.
This is actually. Oh, wait a minute! Single malt.
I told you.
I got a good eye.
I was stepping my game up. Yeah, I don't get anything past you, do I?
Wait a second. I thought this was like beers. We can drink anything on After Hours Real Estate. It's just After Hours Real Estate.
Yeah, it's just After Hours Real Estate. I went through all the like I don't want to repeat my beers, and I went through everything that I've already had. So I figured it's time to have a little whiskey.
I'm a simple person. I will repeat my beers all the time. Yes.
I joined a Dripping Springs whiskey Facebook group, and I have not yet shared with the world how amazing this Denver distillery is.
So let me.
It's Stranahan's, man. This is my favorite whiskey, bar none.
So Kathleen Wainwright, I'm going to give her a shout out. She's a real.
By the way,
cheers. Yes, cheers, my friend. Cheers. She invited me to a thing called Vom Fass. It was a restaurant, or not a restaurant. It was a store called VOM. I think it's FASS, I believe. Vom Fass, and all they do is whiskey. That's it. Whiskey and what's the other one? Bourbon. But it's literally it's all about it. And oh, I love it. Grab my beer. Let's go. Let's do it. Let's do it. Ask us some questions. And yeah, no, good times. Okay, so moving on. We got some topics for today.
We got topics. I got to pull them up. I had to go back inside.
I wanted to talk about real estate just now. Let's do it.
But seriously, guys, for those of you watching, the way we typically do this is we'll just kind of bounce some topics around, stuff that are relevant to home buyers and things like that. If you have specific questions, it is always a lot more interesting if you throw out questions while we are live. So please do that, and it can range anything from local real estate, investment real estate, mortgage loans, refis. What else do you do? You do all kinds of stuff.
There's almost nothing I don't do. Didn't I just demonstrate that with my music earlier?
Yeah, you're pretty much a jack of all trades. And Beverly reminded us that you and I are drinking nectar of the gods.
Oh,
because the hikers in the Rockies use the streams to relieve themselves, and I have done that.
Can I swear on Facebook Live?
It's your show. I don't care.
That's fucked up. Thanks for the reminder. It's messed up.
Thanks.
The bottled water. Who's the guy that does this when he does all the comedy stuff? He talks like, oh my God, what's his name? Anyways, he does this stand up where he's like, yeah, Deer Park. That's the bottled water I want. Because when I want that, I want a deer pissing in my water. I see that picture and I'm like, yeah, that's the water I want to drink. Yeah.
I mean, because why not?
Yeah.
So anyway, back to the point, guys. If you've got live questions that you want answers, and it can be kind of across the board, just ask. We'll definitely answer them. But Steven sent me a list of pre-approved questions, ones that he studied for the last 10 years, just so he can be on it. So let's start with this, man. Conventional versus a down payment assistance loan. Just regular, traditional, old.
Watch this. I'm so excited.
Dude, you have it queued up.
I do.
Wait, I need to hide that.
I just got this made by my marketing department. They're awesome. Shout out to them. It's got all my info on the top. Can you see this yet? I don't know if you're...
Yeah.
There you go. And then we got a stupid generic picture of a house. I don't really like that, but I don't know what to put there. And then it shows you the difference between using a down payment assistance program on the right or using a non-down payment assistance program, just a normal loan on the left. And... you've been doing this a long time. That's about a typical cash to close, 18, maybe 17,000, somewhere around there when you do a down payment.
Purchase price. Yeah.
Right. And you use this T-Shack program and you're at $7,000, $8,000. And that's, by the way, for the minimum amount of down payment assistance.
Scroll that up a little bit.
Say what? Like
Can you scroll it up? There you go. I just wanted to be able to see those lines.
Yeah.
Okay, so just the biggest thing, conventional loan versus a T-Shack down payment assistance.
They're both conventional loans.
Okay.
So it would be like if you just went to a lender who didn't know anything about down payment assistance programs, and you make less than $97,600 a year, it's really important that I mention that.
Household income.
Yeah, and that by the way is the surrounding counties of Austin. Every county has a different income limit. So if you're not within the Austin area, ask me. I'm happy to help you out. Let's just look up your county and I'll tell you what the limits are. But in our county, it's almost 100,000, 97,600. So just general rule of thumb, just sitting there thinking, I make less than $100,000. I should probably look into this, right? What I'm really trying to point out is that when I did this without over here, this down payment amount, this interest rate without T-Shack was a 2.999.
Okay.
And the interest rate with T-Shack was a 3.000. So it was 0.001% worse to take this program. That's less than $1 a month. I mean, nobody's going to see that, right? And then you have a lower payment, even though your rate is slightly higher, because there's a reduced mortgage insurance that's included, right? So at the end of the day, this program is just outstanding. It's outstanding. And this price here could come down by $500 if you didn't couple it with another program that gives you a tax rebate for 30 years if you stay in the house. So I'm telling you, I'm trying to make an impact. I hope this does it. Tell me, what do you think? This is the first person that's seen it.
I like it. You just got to be able to get it in front of people, and today's the first shot at that. Here's my question. Let's say no. Stay in it.
Okay, right.
Let's say that my household income is not under that $97,000 threshold.
Okay.
Let's say it's $100,000. Can I use any part of that program, or am I pretty much SOL?
Well, it depends. If the solid written in stone question is that you're over that income limit, yeah, you're SOL. But there are ways for me to ignore one spouse and use portions of this program. What you're seeing right here, I can use all of this if I can ignore one spouse's income. They wouldn't be able to be on the loan; they'd be on the deed.
So you wouldn't be able to count their income. So
Correct,
that may lower
either.
Right, and it would lower the potential
household income.
But it would lower what you could potentially spend on a house. But if what you're looking at in a house is still attainable under one income, then yeah, you can make over 97 with a household and still qualify for a house.
What's funny that I've noticed in lending, and if I would have known this going in, it would have been very discouraging, but there's different definitions based on programs. So, like first-time home buyer is defined by whatever program defines it, right? So I've seen a first-time home buyer be 2 years, I've seen it be 3 years, I've seen it be 5 years, depending on the program. There's so many. You know what, Chris? I don't know where I'm going with this. The bottom line is talk to a lender before you say you don't qualify or you do. There's so many ways to get around issues.
I got you.
Yeah.
I just wish there were so many ways to get around the sun. It's beautiful out here that it's blinding me.
Good thing I'm sharing my screen, right? All right, I'm stopping this. We've done this. Right. Hope that makes an impact.
You're real, like you're all in on this T-Shack program. Like that's a big thing for your buyers.
To be honest with you, it's not going to be the big money maker that everyone would hope it would be, right? And I know that it pays me almost half of what I'd make if I did a normal loan, but it just feels so damn good.
Again, it's for the benefit of the buyer big time, because usually, my standard answer, and you know this, when somebody asks me, well, what about first-time home buyer assistance programs? What about this assistance program? And what about this one? My standard answer is there's nothing ever for free. So if you're looking into a down payment assistance program, you really better look into it, because they may end up jacking up your origination costs, jacking up your interest rate. A lot of times that's what you see with these programs, but it really doesn't look like that's the case with this one.
Yeah, no, I'm doing this refinance right now, which may have actually ended this morning, but the woman called me, so I don't want to go forward if this is the case. I'm like, okay, well, what's the case, right? Well, the case is that when she moved into her home, she took $8,000 of incentive money to do it that she has to pay back if she refinances or sells her home. So she repays it now or she repays it later. It doesn't matter when, she's got to pay it back.
Right.
And she didn't think that she did. She was under the impression that she got to keep all that money after 3 years, which might have been true if she went into my program, or at least the one I'm pushing here. But she did not, and the programs had changed back then. You said there's no such thing as a free lunch, but recently there has been, and only since COVID hit. It's the weirdest thing in the world. If you have a top tier credit score, right? In fact, I just did this earlier today. Anything above a 760, and you've got a top tier credit score, okay?
Mhm.
And I had somebody with a 777 credit score, okay? Clearly top tier. And we figured out that if they were to do a mortgage on their own, because this guy qualified for the TSHAC program, the program I put on the screen, right? We figured out that if he were to qualify for this thing on his own, he would have to spend about $500 I'm sorry, he would be paid actually $500 to take a 3.125% interest rate. But the TSHAC program paid him $5,000.
Oh, wow.
Right? So it's like he's top tier. You can't get better rates or fees than this guy. And this program gives you another $4,500 for the same rate, right? It's unlike anything I've ever seen. It also reduces your mortgage insurance by roughly about a third of what you owe, right? If you go conventional, right? But the bottom line is it's a cool program. It can also give you a tax refund for 30 years. It's crazy.
Can you use it as a refi?
No, I wish to God that'd be amazing. I'm not kidding. I would be doing more business than God, but I
sorry, it just kind of popped in my head, and I'm like,
I found one of these. No, I found the Travis County down payment. I didn't find it. My sister found it this year, but she found this Travis County down payment assistance program, and it actually did mention that you could do refinances, and then we dug in a little later, and they changed the rules so that you can't do them. It was too good to be true. You know, when the rates are this low. The margins meaning how much the company makes have shrunk so much that all of a sudden, like, I mean, if you were to use one of these programs 2-3 years ago, you could expect that your rate would be 1 to maybe 1.5% higher than the going rate, right? Because you're taking free money, right? So there's no such thing as a free lunch. I told people that. I haven't said that for like a year, almost.
That's crazy. Because, like I said, I mean, and I'm, you know, of course, I'm not on top of that part of the business like you are. So for me, it's always that's the mantra. But man, I guess I got to start changing.
Right now, if you win FHA, USDA, or VA, I want to really emphasize that USDA or VA at the end, you can get a fixed 30-year rate of 2.75%. And then they'll give you 3% down payment assistance, basically 3% of the loan amount. So if you're doing a loan of $100,000 for your mortgage, you'd get $3,000.
Wow.
2.75%.
Well, and 3% is basically going to pay for all of your closing costs.
I moved into my home in January, and I'm top tier credit, and I'm a mortgage lender. You darn well know I got the best rate I possibly could, and I've got a 4% interest rate, and that was a good rate at the time.
Yep, that is a fact. Let's keep cruising along. I'm not seeing that anybody's got questions, and I'm going to keep repeating this, guys. If you've got questions for Stephen or for me, feel free to throw them up in the comments. We'll get them and go live with them. But we're just going through kind of some questions that people like to ask. Go ahead.
I was about to ask you to put that on there, except for Joan. You want to change it to home? But yeah,
stop.
Do it fast. Yeah, credit card debt and qualifying for a home.
Yeah,
this is actually one of the biggest things that people don't quite understand when they come to me. I'll get a lot of people that'll be like, look, you know, hey, I know you want to sell me something. Okay, so I need to pay off some credit card debt. I'll get back to you in like a year. Okay, I don't want your advice. I'm fine. I don't want to be talked into it. And it's like, okay, slow down, right? What is happening to my phone? Okay, so
you're writing another song.
Almost, yeah. I will later. So when you're buying a home, we have to hold your debts against you, right? But for the most part, we don't really care how much money you owe. That's surprising in any way?
That's crazy.
We don't really care what the balance is that's due. What we care about is what the minimum payment is.
Yeah, that's because it's your debt. What do you have to pay every month?
I'll get some people with like $15,000 in credit card debt, and that minimum payment is like $240 a month, right? And they will spend an entire year getting that credit card debt down to like $4,000, and they go from there $240 to like $120, and something like that. And it's like you just spent so much time in the wrong spots. You didn't understand. We're not holding that balance against you. It's the minimum payment we're holding against you.
And again, that goes back to, you know, wanting to see somewhere around 30% on that card, you know, with that revolving credit. So yeah, there you go again. So not only are you hurting yourself, you're hurting yourself by, And look, I'm going to back up. That to me, it aggravates me to no damn end how credit works. And I get it. I understand. It's annoying that you actually can qualify for more house if you are more in debt, and it drives me up the damn wall. But
Yeah.
fact of the matter is, that's the fact of the matter. So yeah, don't necessarily worry about paying off every last dime that you owe, because chances are to probably end up hurting you a little bit.
Yeah. And deferring your payments so you don't have a zero, or so you have like a $0 payment doesn't help either.
No.
Student loans, right? So if you have a student loan that you've deferred payment, by the way, probably 90% of the people that apply with me have deferred the payments of their loans, their student loans. Almost everybody.
Because of coronavirus, or just
Actually, they were doing it before Corona, and now it's like it was probably like 50 to 60% before, and now everybody's doing it. What happens there is I have to use a 1% balance against you. So say you have $200,000 in student loans, but you're hey man, it's deferred for 10 years. I'm not even making payments on it. Okay, well, when you buy a house, it's considered $2,000 a month being held against you.
Wow.
Now that will knock you out of the contest real fast. Now you have the same credit card, it would probably not be $2,000 in a minimum payment. So it's people try to pay the cards first. Okay, well, that being said, one more thing I want to mention is that say you've got like a car payment, right? Not a lease. If it's a lease, I can't help you. But if it's like a car purchase, in other words, when the payment finishes, you're not going to go ahead and buy a new car, right? Like I guarantee you will with a lease,
Yeah.
Then let's just say there's 10 or less payments left. I can ignore them. They're going to go away. You got a 30-year mortgage coming up. I don't even have to count them.
Interesting.
Right. So that's usually aren't the problem. Because if that's the problem, then credit score was an issue as well.
I was about to say, what's the problem? Let's be honest. What's the problem? It's credit score and late pays and non-pays and stuff like that.
We can go down this tunnel, living habits and all the rest, right? We can keep going down that rabbit hole. But bottom line is, and I'm no perfect angel either, by the way. But bottom line is that there's a lot more that goes into it, and so that if you have a lot of credit card debt, please don't assume that you can't afford a home.
I think that needs to be what your marketing department comes up with. That exact thing. If you have a lot of credit card debt, don't assume you can't afford a home or you can't qualify for a home. Call Steve and find out how.
In a lot of cases, it would actually be worth it. I mean, if you bought a home when I did 6 years ago, by the way, when I bought 6 years ago, I was being told that I was buying in a bubble and I was being stupid, right? Nobody knows. Okay.
Everybody's still asking the same question. Is it a bubble? Is Central Texas in a bubble?
Yeah.
Short answer. Spoiler alert. No.
Yeah. It's been a bubble for 15 years, people.
Yeah.
No, we sold our home for almost 50% more than what we bought it for 6 years later. So, that paid off some of my credit card debts. It just did, right?
Yeah.
It was a no-brainer, and I would never have had that if I didn't own a home. So you gotta own a house.
Leverage. Talk about leverage.
So, the other thing I wanted to talk about was the minimum down payment, because it's very much misunderstood.
Oh yeah.
I don't know. Type in like 20% down ? Mark. I don't know.
Oh yeah, there you go. I got you. Okay.
So you do not have to put 20% down. In fact, today it's generally a bad idea.
Qualify that though.
Well, in 1983, rates peaked out, at about 22.5%. Think about that. Just wrap your head around it. Okay, Sally and Sue Smith, here's your 22.5% locked interest rate for 30 years. You just bought your house with a credit card, right? Basically. Okay. The advice back then was to put 20% down so you'd avoid mortgage insurance and lower the damn loan as much as you can, right? And that made perfect sense. You bought your house with a credit card, basically, right? Today, I just told you can get a 2.75% interest rate. That is 21%, 20+% less than it was in 83. That's crazy to think about, right? So at the end of the day,
how many 100 times less?
I mean, let's just don't even. I mean, I could do a whole show on what that really means, how much purchase power and all the rest.
Yeah.
But let's just say that you put money into the stock market. Chris, what's the average return on the stock market? Do you know that?
5 or 6.
It's like 5 or 6%, and then the high end,
Adjusted for inflation, yeah.
except for outliers and all that, high end you could hope for maybe like 7 to 12, somewhere around there.
Yeah.
Let's just say bad scenario, you're doing 5%. Well, your mortgage is 2.75% right now. Why are you making extra payments? You should put that extra money into the stock market, and even in a bad year, you'd be doing 5%, right? And nobody knows this stuff, right? If I really knew, I'd be on E-Trade all day, right?
Right.
So take it with a grain of salt. But I mean, when the rates are that low, it doesn't really make sense to aggressively pay off your mortgage at all. It's its old style of thinking, and it was a correct style of thinking back in the 80s. So we're ARM loans, right? Where you locked in, and hey, if the rate changes, we'll go with the rate. Great. In the 80s, we're at 23. Okay, now we owe. If you hooked up in a loan, an ARM loan in the 80s, you felt like you were the bandit every single year almost, right? Your rate has been coming down and down and down and down and down. Today, there's not much space for the rates to go down. I don't think it's really that smart to save 0.5% and go into an ARM loan that would change next year and wipe out any savings you may have had the year before.
Yeah, that's pretty tough. I mean, I'm trying to think of any specific ideas, but I mean, if you know you're going to be in the house less than 2 years, maybe, or 2 years, so you can get past that.
The average is 5. In Austin, it's like 6 months.
Right.
But,
yeah, that's what I'm saying. You would have
to
know. Like, you would have to know. I'm here for 2 years and I'm gone.
Okay, but 20% down. 20% down. You don't have to do it. You don't have to do it. 2008 happened, people, and there's been a lot of changes since then. And one of them was that the minimum down for a first-time home buyer on conventional loans is 3% now, not 5%. And many of you may be surprised to hear that it used to be 5 and not 20. Right. I run into that all the time. And then you could do an FHA loan for 3.5% down. That's the minimum there. And then there's a USDA and a VA. Those are 0% down. And then there are some jumbo programs that are only 10% down. So, I mean, it's 20% down is just an old style of thinking. You can
and 10% for a jumbo is pretty crazy.
Yeah, most of them want 15. It depends on the credit score, etc. But there's programs out there. There were a lot more before COVID hit. You don't have to put 20% down on a jumbo though, and jumbos don't have mortgage insurance, believe it or not.
Right.
You think of all the loans out there, but the bank needs to gather an insurance policy from their clients to make sure they're going to be okay. It would be the ones that cost a lot more, but who knows, right? Who knows? What do I know?
All about liquidity, brother.
Yep. Got any questions yet? Anybody want to know anything?
No, people are just agreeing with my knowledge base. I mean, that's that's all.
I noticed they're not agreeing to me; they're just agreeing to you. It's cute. It's cute. Thanks, everyone.
That's because that's a friend of mine. You just don't have any friends yet.
No, I don't. Not on Facebook. I don't use Facebook.
But check your phone because you just got a lead from this show.
Shut up! I did really?
No, seriously.
Maybe I should check it after the.
Oh, sun's down.
So I love them.
Yeah.
They're amazing.
Yeah, she's amazing, right?
Yeah. P.S. I'm very much aware, even though Chris didn't tell me, who sent that picture of my background in the last couple shows ago. So, yeah, you don't have to.
No. It was not Shelly.
It was not her.
No.
Oh, I was sure it was her.
It was the friend who agrees with me. It was Denise. I just called her out.
Denise, I desperately needed to know. No, don't know.
She felt bad.
I thank you. Thank you. I needed that. Denise, I needed to hear about that. Nobody wants that in the background. Thank you very much for immediately pointing it out in the first show where that happened. That's awful. That needed to happen. Yes.
It is after hours real estate after all.
Yeah. Yeah, but it wasn't that late. It wasn't like 11:30, to 2 a.m. Real estate. It's like 5 o'clock, happy hour. We're not getting, we got kids tomorrow kind of thing.
Exactly.
Yeah. Hey, exactly. Can I do a shout out? It was me who sent the referral. Yeah, because you're awesome. Yeah. Thank you. Yeah. By the way, I got the text. I haven't really read it yet, but thank you.
If y'all don't know Shelly's the future mayor of Dripping Springs. I'm just saying. Everybody loves Shelly.
So you know that
your shout out.
My youngest son Luke is.
Oh, dude! Did you tell this story last week or no? Or did you just tell it to me? You just told it to me.
Yeah. 40% of children on the autism spectrum never speak. And I was playing with Luke. I saw a movie called Temple Grandin, and it really changed my whole perspective on things. So I started treating him like I treat my other son. So we played for like 2.5 hours together while my other son was at a friend's house. That's awesome. After the maybe 2 hours, I started tickling him, and he started saying "daddy," and it was his first word. It was the cutest thing I've ever experienced, and I was bawling my eyes out. But I got to give a shout out to my kiddo for speaking. As crazy as that is to say.
Well, but
You know?
tell the story. Y'all didn't even realize that he had been speaking for a little while,
A
and
little
y'all
bit.
didn't even know.
A little bit, yeah. He was going hi, and we didn't realize that was hi, but he was absolutely saying hi. He was he's making his own strides in his own way. When you get
Absolutely.
40% of kids that never speak, and it's like, what parent wants to roll that die? Here's a
Yeah.
10-sided dice. Go ahead. Pick 1 through 4. You're screwed. I
Yeah.
it's such a terrible. How do I describe this? It's been such a horrid burden to think about. What I could be doing, etc. You always blame yourself as a parent.
Yeah.
And that was just a horribly relieving thing. So I just wanted to and proud moment, right? So I just want to give a shout out to my kiddo. That's all.
That's awesome. That's awesome. Yeah, that's freaking awesome news. But
Couldn't be happier.
all right, man. Well, let's end on
30
that.
minutes?
Let's end on that happy note.
Yeah. I
That's a
think we
good
need
spot
to
to end.
stick to like 30 minutes because after like 45, we draw it out too much. It's like 2 people watching like it did this.
Well, and at this point, you're probably looking for another banquet.
So just about.
All right, guys, we're going to wrap it up. After Hours Real Estate again. Stephen Babcock with Benchmark Mortgage. Let me see if I can get this banner up here. If you guys got any questions about mortgage, you can text or call Stephen at that number right there, 512-497-3742. One of the best in the business, obviously very knowledgeable and actually a caring person. He's not just running around. No, I'm serious, man. There's a lot of people right now who don't even want to do, purchases because they're doing refis and they're like, life's great. I don't need to deal with all this other crap. And they're just doing refis, and they don't know that next year, nobody's going to be referring them any business because they were jerks to everyone. So,
yeah, you have no idea. I've run into a lot of that. I've actually picked up a few realtors recently that are angry with their lender that doesn't do refinances for their clients anymore because they're too busy. And it's like, okay, I'll help you out. That's fine. I'm not too busy. Let's do it. Let's go.
That's right. That's exactly right. So, yeah, give Stephen a call. If you guys need to get in contact with me, 512-736-1703. Yeah, show up next Monday, and I'll try to have a new beer so I'm not drinking whiskey.
There was one more thing I wanted to talk about that we didn't talk about. Can we just broach it for like 20 seconds?
You got 20 seconds.
I need your opinion on this one. Appraisals.
They've been a crap show lately. And a crap shoot.
I can't get them done without taking 3 weeks now. So they're taking forever. But what I'm really interested in is the offers being made and then using appraisals. So you make an offer and you say, we'll waive the appraisal addendum.
Yeah.
Can you explain what that means and why you would do it? Or do you want to do that next time?
Let me take that backwards. No, I'll do it quickly. Why would you do it?
I know why. I just
yeah. Guys,
you'll do better than me though.
Yeah, what Stephen's talking about is when you're going to take out a loan on a house, you have to fill out what's called a third-party financing addendum. And in that third-party financing addendum, there is an out for you if the home doesn't appraise. And then,
what does that mean, Chris?
If you're going to pay $350 for the house and it appraises at $340, that means that they are not going to give you the loan for that $350,000 purchase.
We'll
it's
give you
going to be $10,000
lower. Purchase. That's right.
That's
you got to bring the difference. Okay, keep going.
So you got to bring 10 grand difference in it. So right now, with escalating prices and multiple offers at every turn, especially in Austin, and price points between like 300 and 450, everything's going multiple offers. And in order to win the contract, what people have resorted to is to waiving the appraisal contingency. And what that means is that house comes in at 340 instead of 350. You as a buyer are going to pull $10,000 out of your pocket in cash and bring that to closing in addition to your down payment and your closing costs and your prepaids and everything else. So, on a $300,000 loan, that could go from $9,000 in closing costs to $19,000 in closing costs plus that $10,000 in appraisal that you're waiving. Now, it is a great way to win the contract because at that point you're essentially a cash buyer. You're not worried about the appraisal. I would have to have a very, very strong conversation with any buyers that I had that wanted to do that and make sure that they had very good reasons for doing it, not just because they've lost out on, the last 10 offers in multiple offer situations, because that's what people are starting to do. They're getting frustrated and they're going, screw it, I'll do whatever the hell I have to do. And the agent goes, well, there's one thing we haven't done yet, and that is waive the appraisal contingency. So the most recent example that I heard of with this was my broker. He listed a house over kind of Manchac and Davis area, listed it at 300,000. He got an offer for 350 the first day, 50,000 over, and that is 1/6. What is that? 17.5% over list price. And
1/7. Yes, keep going.
Yeah. So they waived the appraisal contingency, brought an additional 50, or were willing to bring an additional 50,000 to closing on that house. Guys, freaking this bee is driving me nuts.
Yeah, I got a fly in here. It's driving me nuts too.
I mean, 50, going back to your point about what you can use that money for, that's not a part of your down payment, 50 grand that if the house appraised at 300, you're willing to bring $50,000 cash to close that house.
There's another thing that's not normal. Usually you'll see multiple offers in the, I'm married, each of us are working range, which is like 250 to 400, right?
Yeah.
And I had one that was $620,000. That was the sales price. And they had 18 offers over a weekend. Sorry, 16 offers.
That doesn't surprise me.
It surprised the hell out of me. I mean, it was that price range. I thought maybe 2 or 3, but not 16. It's getting crazy.
Was it? I'm curious. Was it in Southwest Austin?
Yes.
Hey, welcome to Circle C and Avanya and Meridian, folks.
Which used to be like $300,000 homes too, by the way.
Right. Well, and it doesn't. Because what's the mantra of real estate? Buy in a good school district.
Location, right?
Yeah, I mean that's exactly what it is. You're 15 minutes. You used to live down there. You're 15 minutes to downtown, and you're in probably arguably the best school district in city of Austin. Of course, that's a hot market.
Well, that was the only other thing I wanted to bring up. So.
Oh, and by the way, if you are a seller that's in that situation, I just was thinking about this the other night. If you're a seller that's in that situation and somebody's giving you 50, telling you they'll pay 50 grand over your ask price, because chances are your agent knows what they're doing and they're not overpricing your home, because that's the dumbest thing you can do in this market. Let the buyers be dumb. Anyway,
he's right.
I mean, so anyway, your agent knew what he was doing, or she, and priced it at 300, and somebody brought in an offer at 350. Your agent had better ask for proof of funds if they can actually close that damn loan.
I've only had one agent ever ask me that in my entire career.
I'm going to tell you what, because you just went from $9,000. No, I'm sorry. You went from $18,000 with a 3% down payment and 3% closing costs. You went from $18,000 to $68,000 that they need to have liquid, in addition to prepaids. And how many months of liquidity are y'all requiring?
Well, we're not, but we are. So it depends on credit score. So
okay.
If you have a loan of credit score, yeah, we need some sweet. Yeah,
they're going to need a few months in that.
I'm sorry, I heard reserves. Hello.
No. I said prepaid. I misspoke. I meant reserves.
Okay. All right. Great. Well, you do need prepaids too. In fact, that's a misunderstood thing. You have to pay for 3 months of taxes and insurance when you close on a home.
Right.
And 2 months legally, the bank cannot take more than 2 months of each, but you paid for 3, right? And that's when you move into a home like January 1st, you don't pay on February 1st, you pay on March 1st.
Right.
And you actually do pay in February. That's where the other one of 3 taxes and insurance comes from. It took me a while to learn that, actually, in lending.
Right. But again, backing up a little bit, now you've got a buyer who was thinking that they're going to get in with total cash out of pocket around 20 grand. I mean, that's what you just showed us on a conventional loan. And now all of a sudden it's 70 or 80 grand that they need cash out of pocket, and they've got to have reserves also. You, as a seller, you better be asking for proof of funds on that, because what happens when you get to the end of the damn loan? What happens when you get ready to close and all of a sudden they don't have the cash?
Yeah,
you're out as a seller. You're out. The only thing you get to keep is earnest money.
I gotta have the new I don't know what's it called. The new EV from GM. The new
Electric vehicle, I don't know, something.
Yeah, but what's it called? Hummer, right? They're doing a Hummer EV. It's
Oh,
only
yeah, yeah.
$112,000, right? Well,
So
there's not going to be a lot of them, so
that's right.
I'm going to spend 150 instead of 112. That is
That's
the
exactly
exact
right.
equivalent of what you're doing here when the appraisal comes in short.
Yeah.
That's it, right? And there's no shortage of cars, just like there's no shortage of homes. Right now, there kind of is, but there's plenty of them out there,
That's right.
right?
You're just picky.
Yeah, you could write a letter to people, right? You
Yeah.
can get it done.
Well,
All right, we're
that's
rambling
a
now.
conversation for another time. But anyway,
Okay.
there you go. Yes, a lot of crazy things going on right now. If you find yourself in that situation as a buyer or a seller, obviously, if you're already in that situation, you really can't reach out to me. You can reach out to Stephen, though. He just can't disparage anybody.
Yes. Well, the truth is, anybody wants questions answered, even if you're not going to use us professionally, please ask. Well, we'd love to help.
Yeah, without a doubt. Without a doubt. Oh, and let me see. Okay, so we're getting more comments over here. Shelley said it's true about something. I'm assuming it's something that I
Right.
said. Set up that pipeline. Yes, Denise works for
no kidding.
Corridor Title and does a great job for Corridor. And then Thanksgiving beer. Evidently, Shelley is inviting us all over for next week Thanksgiving beer. So if you are watching this video next week, everybody's going to Shelley's house. She's providing beer.
That sounds great.
All right.
That's great.
Thanks for joining me, buddy.
Thank you.
Till next Monday, y'all have a good one. Cheers.